Are you in property and have you ever wondered, should I have a holding company or should I form a group of companies? If so, then this video is for you. We answer why you should have one and how to set one up. And the expert joining me today is Tej Gill of Nijjer Accountants. Welcome, Tej.
Andrew, thanks for having me back.
You're very welcome. So, Tej, holding companies and group structures. I mean, this is a real hot topic. If I was to walk into a property room, pretty much I can guarantee I'm asked within a few seconds, should I have a holding company? Should I form a property group? Well, can you help explain briefly what a holding company and a group structure is?
Yeah, absolutely. So you're right. It's one of the most popular questions that get asked from existing or prospective clients as well is, how should I set up? Do I need a group company? Do I need, do I need a separate development company, separate holding company, and all of these things? And it's very much like you get topics that are on trend. This is very much on trend at the moment for people to be thinking about, and rightly so, because there are benefits to having it in place. There's obviously a few cons as well, as you like, as with anything. But the idea of a holding company essentially is to act as a vehicle that holds all the activities that happen beneath it. And the key benefit for that, one of the key reasons that people like to do that is to, one, organize their affairs. So if they've got lots of different businesses that intertrade with each other, then having a holding company at the top can just make it more simplified, more streamlined. And it also means that if you do go down the route of alphabet shares and things like that, it can be done at just one company level as opposed to needing to do it across multiple companies if you work with the same investors regularly.
Okay, well, that's really great, because what you've effectively done there is pointed out some of the key benefits. Now, before we go into why we set these structures up in the way that we do, surely having lots of companies increases costs massively because you've got so much more admin to do. 2 sets of accounts, 2 sets of tax returns. So is that a downside, or are there benefits that actually make this really, really worthwhile for people to grab onto?
Yeah, so I think the main disadvantage of having a group structure or lots of companies together is the cost implications. There are accounts that need to be prepared for each one, potentially VAT returns for multiple entities, payroll, CIS, whatever else that you have going on in the businesses. So you may have, those things multiplying up and those fees therefore becoming higher. But as with anything, it's all a cost benefit analysis, and the benefits can generally outweigh the additional administration costs of carrying a holding company or anything like that. When you talk about benefits, there's obviously once you have a holding company at the top and then you have sub companies below it, they form a group, and provided that they meet the criteria for the different taxes, you can transfer assets between the group without any tax implications, without any stamp duty implications. Obviously for property investors, that's a big one. And also you can, if you want to loan money between companies rather than just loaning directly, which is perfectly fine, it can sometimes be cleaner to dividend it up to the holding company, and then that one loans it down to keep the loans coming out of one entity as well. So there's a few benefits practically, operationally, and also just for keeping your books a bit cleaner and tidier as well.
What I'm sort of seeing as some benefits here is, number one, it can simplify the taxation within your vehicle, because if done correctly, you save stamp duty, capital gains tax when moving properties around your group. It can help you in terms of the structure from a VAT point of view and a CIS. Now, if you're not already a subscriber, I suggest you smash that subscribe button and the bell icon, because the very next hot topic that Tej and I will be talking about will be CIS, Construction Industry Scheme. So you want to make sure you're subscribed at this point so that you don't miss that very, very hot tax topic out. So Tej, moving on, we've done sort of why we'd have a group structure. Now, I've already got a property company. I set it up and I've been buying properties for a couple of years. Somebody's told me I should have a trading company, effectively form a letting agent to manage my properties, have my investment vehicle, which is owning the properties, and I should have a group. How would I go about doing that? Especially if I bring in a development arm as well.
Yeah. So this is this is the key question, is how do you implement it? Because the questions that are asked by new clients, as with anything, it's easier to set up the structure from the beginning. It gives those planning opportunities to say, well, where are you taking this? Where do you see this going? And then build around that, so there's a solution that gives the client what they need. Where you have existing clients who say maybe have already incorporated their residential portfolio, or have started to just purchase in a limited company anyway. Question then is, how do you stick that holding company above? Because obviously no point in putting it below. So the most common, the way to do it is you would need to get HMRC's clearance first of all. So you need to go to HMRC and say, look, this is what we're about to do. We want to insert this holding company. It's a process called a share for share exchange. You go to HMRC, explain the rationale behind it. And it can't be for or solely or mostly driven by tax benefits. There has to be some commercial reason behind why you want to insert a holding company. And if you can state those clearly and make the point across to HMRC, then you can get clearance to insert the holding company above. Now that is obviously a more involved process than setting it up from the outset. But again, it's one of those things that you've got to weigh up whether the cost of putting it in at the start, getting it put in via a share for share exchange is going to be offset by the benefits that you'll get. And the planning opportunity it provides, as you said, around that and everything else, is what really gives you those, is what's going to be the benefit from putting it in. Because we talk about conversions a lot. Conversion of commercial property, generally at 5% VAT for that. So after that has been completed, you need to make a sale of the property in order to recover that VAT, or a grant of a long lease, which I think we've spoken about before. Now that can be done within a group, and that will allow you to recover your VAT. So to do that, you need that common holding structure at the top, so that you don't end up paying stamp duty and other taxes as you transfer it around.
That's a really great point, because you and I both do a lot of commercial conversions, and I know we were off visiting one of our colleagues who's just bought a £3 million plus building, and he's got a £3 million plus worth of building works to do. And there's an awful lot of VAT in that. There's £600,000 worth of VAT that could leak out the front door if you're not very careful. And that really impacts cash flow. So what we're saying is we'd need advance clearance of HMRC, that we're not doing this just for tax purposes. So give me an example of a reason you might use to HMRC, because I appreciate it, but clearly the audience may not get why you need advance clearance, that it's not just for tax saving.
Yeah, so I mean, HMRC are generally, as a principle, they're happy for you to organise your affairs as you wish, provided that they don't, the revenue doesn't suffer in terms of taxes. So if you're taking actions and the only thing really is a tax motive, then they come down hard on those. But in this case, there are commercial reasons around why you would want to insert a holding company, and the main one comes around risk. So where you have, let's take that example with the property, £3 million property, and the amount of work that's going to be in there. I think we said there's going to be probably between 100 and 110 people on site at any one time. That's a lot of potential issues that could arise, accidents and other things as well. So one of the main things about having a holding company in place is that if you were to separate assets from trade, then those assets to an extent can be ring fenced and protected in the event that the trade, the development business or whatever other trade you might have has a claim made in it. You can separate the assets away and just look at the one entity itself and the assets and cash and whatever remains in that one entity. There are obviously, provided that the rules have been followed and you have all your health and safety in place, and you have your employer's liability and public liability and everything else, then you should be fine in that respect. If there are any corner cuts or anything like that that's been happened, then you run the risk of potentially that veil of incorporation or the separation between the two companies being ignored, and potentially still being able to come after the assets that we've just tried to ring fence away. So yeah, we've got to make sure that the operation is running properly and ticking all the boxes.
I think you've just raised a massively important point that for the audience to grasp, and that point being, if you do things and what you're doing is not strictly best practice, then the veil of incorporation can be punctured, which basically means your group structure no longer exists. So you have to operate them as though they are totally separate legal entities, which they are in law, in order that you can protect your structure and also protect the tax benefits as well of that structure.
Yeah, precisely, exactly. You need to make sure that the commercial operations and everything else ties up with the whole plan, because one thing can make the whole stack fall over.
So today, Tej, to summarise, we've looked at the benefits of holding companies and group structures in terms of you're able to pass money around the group via dividends and loans. We're able to transfer assets around the group, avoiding paying stamp duty and capital gains tax with group reliefs. And we've looked at how we can set up that group structure in a very fast and easy way if it's done at the start, or coming up with commercial reasons why you wish to set up the group structure, such as it will reduce your risk of operation, protecting the investment assets in the event that something went wrong on a development site that you might be running.
Yeah, exactly. I think the other thing was also the potential for VAT recovery as well within the group structure.
Yes, it does make the VAT recovery much easier, and I think we'll be doing a video on that one in the near future. So if you want to find out how to recover the VAT on your property projects, I suggest you smash that like button, hit the subscribe button, and don't forget, hit the bell icon, and you'll be the first to hear when Tej releases his next video with us. For today, I'd like to say a massive thank you to Tej Gill of Nijjer Accountants, phenomenal chartered tax accountant. So he's not a chartered accountant, he's a chartered tax accountant, a specialist in this area. Thank you for joining us again today, Tej.
Thank you for having me again, Andrew.
And we look forward to seeing you all very soon.